Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in company reports, especially when they're about to spill some tax tea. Today we're diving into Realty Income Corporation's latest filing, an 8K report that dropped on August 15, 2025. And it seems they've got an update on their United States federal income tax considerations that's supposed to replace older information. So what does this mean for investors and the company's tax strategy? Let's break it down. First off, Realty Income Corporation is a big player, often called the monthly dividend company. And they own a ton of retail properties, mostly in the United States and the United Kingdom, that are leased to tenants on long-term net lease agreements. Think of them as a landlord to many well-known businesses. Now, this filing is an 8K, which is a report of big events that shareholders should know about, and in this case, the main event is an update to their tax information. It's not a full financial report like a 10K or 10Q, but it's about something crucial that affects everyone associated with the company. The really important part is Exhibit 99 Hoyne, which contains the updated United States federal income tax considerations. This document is going to replace previous tax discussions found in older prospectus filings. They're essentially saying, heads up everyone, the tax rules or our understanding of them have changed. And it's important because taxes deeply affect a company's profitability and how much money is left over for investors. Why update tax info, you ask? Well, tax laws can change, investor expectations about taxes can shift, and companies might adjust their financial strategies based on new tax environments. For Realty Income, which operates a bit like a real estate investment trust or REIT, the way they handle taxes is super important for how they can pay dividends and grow. They're telling us that the tax treatment for their securities has been updated, and this supersedes previous statements made on February 16, 2024, and then updated multiple times throughout 2024 and into 2025. This tells us tax is a dynamic area for them. While this filing doesn't have detailed financial tables like a quarterly earnings report, it does list the various types of debt securities Realty Income has outstanding. You can see they have notes maturing in years like 2027, 2029, 2030, 2031, 2033, 2031, 2033, 2039, 2042. For example, they have the 1.25% notes due 2027 and the 1.875% 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 notes due 2025. 27 are that the 1.125% notes due 2027 and the 1.875% notes due 2027 and the 1.875% notes due 2027, then also have higher interest notes like the 6.000% notes due 2039. The fact that they have so many different notes with varying interest rates and maturity dates indicates they are actively managing their debt and capital structure, probably to get the best rates and manage their cash flow. It's like a diversified investment portfolio, but for borrowing money. All these notes and their common stock are traded on the New York Stock Exchange, meaning they are subject to the rules and scrutiny of the major stock market. This listing also means they have to be transparent with investors, which is why we get filings like this. The core of this report is about tax implications. Think about it. If the tax treatment of an investment changes, it can make that investment more or less attractive. For Realty Income, for instance, how they are taxed can affect their ability to pass through income to shareholders as dividends, which is a major draw for their investors. This update might signal a change in how their income is categorized or how certain deductions or credits can be utilized. They've also listed notes like the 3.875% due 2031 member and the 3.375% due 2031 member. Having multiple note series in the same year with different coupon rates suggests they're tapping into the debt market at different times and possibly at different interest rate environments, or to meet specific funding needs for different projects or acquisitions. The fact that this update is filed with the Securities and Exchange Commission means it's an official update that investors are meant to rely on for making investment decisions. It's a move towards greater clarity and perhaps a more favourable tax treatment for certain aspects of their business or for their investors. So what's the big picture here? Realty Income Corporation is proactively updating its investors on its tax status. This isn't just a minor detail, it's fundamental to understanding the real return on investment after taxes. The filing highlights that the tax landscape for companies like Realty Income is complex and can require frequent adjustments. They are reinforcing the information about their common stock and various note series, all listed on the New York Stock Exchange, showing they are a publicly traded entity with a diverse range of financial instruments. Looking at Realty Income, its strategy of external growth through acquisitions and its reliance on net lease agreements means it must constantly manage its capital and tax position to maintain its dividend payouts and profitability. This tax update is just another piece of that puzzle. It's like a chef refining the recipe to make the dish even tastier for the diners, which in this case are the shareholders. They are making sure their tax foundation is solid for future growth and sustained shareholder returns. This kind of update shows a commitment to transparency and managing their financial health from all angles, including the crucial one of taxation, and managing their financial health from all angles, including the crucial one of taxation.